The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the April 20th magnificent Monday edition of today's opening bell on the Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope each and every one of you had a fantastic weekend out there. Let's make sure that we do everything we can to have an extraordinary weekend. Of course, an extraordinary day today. The easiest way to do that is to always remember that life happens for us, not to us. That's right. That little 2x4 exchange makes all the difference in the world because it's the key to finding the gift in every set of circumstance that life is going to throw at us. That's just simply what life is supposed to do. Just like these markets, they're supposed to they're supposed to throw out something for the bulls and the bears each and every day. So you and I, we're going to go on a safari hunt today. Of course, I'd love to hear from you because I'm here to serve you. I'm grateful for your presence. Just pick up that phone, dial on in at 877-927-6648. Internationally or locally, you can call us at 727-445-1044. That way we can go on the safari together. We can go looking for bulls and bears on this magical Monday. Of course, this is none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got Dow futures up 115 points. They're trading out at 17,885. S&P futures up 11. They're trading at 2,086 and 50 cents. Nasdaq futures up 16. They're trading at 43.66. Russell 2000 up 7. King dollar up 360 ticks or so, trading out at 98.06. We'll go take a look at the soft currency market. We'll look at the hard currency market. Right now, Goldilocks back $6, trading at 11.97. Silver down 22 pennies. 1 3/10 to the downside, trading out at $16. Even Steven. I like that even Steven. Of course, you have light sweet crude. She's trading at 55.40. That's down 34 cents. Let's begin our day. Let's begin our morning. Let's just go see what happened around the world out here. You had the Shanghai and the Hang Seng both closing lower, 1 6/10% and then 2%, even after a triple R required reserve ratio by the People's Bank of China being cut out there. So we've got the markets were trading lower. The Nikkei basically unchanged. It was off 18 points. Let's take a quick peek, take a look at that Shanghai out here. What did that mean? Well, you know, what's interesting here, no island reversal. We mentioned this as a potential pattern out here on Friday. We saw that little gap up, and we saw our markets trading much lower on Friday. And so there was that possibility that we would see an island reversal, not to happen. That pattern no longer exists because the high of the 16 was 43.95. The low of yesterday, last night, 43.91. No gap out there. However, you've got your second key reversal session in, you try saying that 3 times in a row real fast, in 4 trading days out here. There was one that took place at April 15th. It got blown away. You always like to have confirmation, which means some follow through out here. And he certainly did not get that on April the 16th. So you've got... and now key reversal sessions, they're to be respected out here. They can lead to, they should lead to some type of retracement out here. We'll see if that takes place inside of the Shanghai. Any close above last night's high out there, super strong, 45.64. Then that says that the Shanghai moves up into the 46.42 level. It wants to get up there. It will get up there. The question is just simply when. If we go take a look at the Hang Seng out here, off 558 points last night. Now, if we look at this, I don't have volumes for you, but really still not too shabby. You know, this had this huge 1,600-point day on April the 9th out here. I mean, there was a gap up. If you took a look at the close on the trading day of April the 8th, the close out there was 26,236. The very next day, it spiked up to a high of 27,922. I think it was like about 1,685-point move or so, give or take a few dollars out there. That's a huge move. So prices right now just coming back into this little breakout area. Again, I don't have volume, so there's no way for me to benchmark that, but I can tell you candlestick-wise, it's still not too shabby out here, even though the Hang Seng was off 558 points. You'll see in the case of the Nikkei, no damage really done here last night. Not a bullish reversal signal or anything as well, but no real damage inside of it. So now let's go switch over, take a look at Europe. As we take a look at Europe, the DAX is up 203 points. The FTSE is up 41 points. Now, we'll start with the FTSE. The FTSE, as you know, let me put the weekly chart up on our screen here for you. Now, we pay attention to the world markets as we kick off today's session, just simply to get an idea, because we have these one world markets out here. I mean, that's really what it is, and you gotta trade it as such. Now, as we put the weekly chart up on our screen, the yellow line is the real key area. That is a 2009 high inside of the 1999 high inside of the FTSE. That's 6950.60. You got a nice close above it a couple of weeks ago. Last week, just simply a pullback, never really tested it. You know, as long as 6950 holds out inside of the FTSE, that is extremely bullish for that indice out here. If we go take a look at the DAX. The DAX on Friday, you know, traded off fairly hard. Let's pull this back. Let's take a look at this. Is a weekly chart here for the DAX. Got a little nice big old bearish engulfing bear sash type candle out there. That is a bearish reversal signal. If we take a look at that's on the weekly chart. If we take a look at the daily, though, what do we have that's really going on out here? You know, not much. Really, inside of the DAX out here, it's just really consolidating up here at these highs, working off this overbought condition. If we take a look at retracements, it's got such a long way to go just to get to a dead cat bounce. That would be the 10,849 level. Now, the people would think that's another 1,000 points to the downside, that would be like a big move and it would be over in the DAX. Nothing could be further from the truth than that being the case out here. So it is really still super strong. Now, as far as today's move out here, what's the meaning of today's move? It's an inside bar as we speak right now. So somebody could get lost in the numbers out here with the DAX being up 200 points. Reality is it's an inside day. An inside day, if this is how it finishes, says that the trend that it came from continues. You know, about 70-80% of the time, that is really the meaning of an inside day out here. Well, you got an inside day that says that prices continue to move lower inside of the DAX. I'd have to say the first target becomes 10,849, but really no damage done if it gets down to that level. So that's what's going on across the world. Now let's go check out our markets. What's happening with our futures as they're moving higher? Let's go take a look at the daily charts. Let's go see what each of them mean. Let's start in the lower right. Let's go take a look at the NASDAQ out here. We look at the NASDAQ. You're going to see on my screen really three. Well, you're going to see a number for us online. So let me do this. Let's do this one at a time. We'll turn a couple of them off. Then we'll turn them back on. Let's see, which one is that? Nah, don't want to do that. Nope, didn't want to do that. Third time is the charm. Okay, so now what you're looking at on my screen, if you're watching us on Tiger TV, thanks so much for doing that. If you're not, let me describe to you what we're looking at. What we're looking at here is a consolidation. Consolidation. This says that the DAX has been consolidating since February, around February 11th, if we want to be exact. So the bottom of that consolidation box, $4,270, give or take. The top of the consolidation, in essence, is the highs from March the 2nd are very close to it. I'm using the very close to it, and I'm almost really using the March 20th high out there. You don't have to be exact on this. You don't have to be, this is really a guideline. And it's a great guideline for both you and I to use out here. Now, from 4270 to 4470, you've got a 200-point move out there. I know I'm going to be able to subtract one of these days. 200-point move. Price is just moving with inside the consolidation. It's been a fairly decent consolidation. As I say, this is from the February 11 time frame. You want to see what a decent consolidation looks like? Well, I can't do it on this chart. It's, how about the Dow? The Dow, if you take a look at where the Dow closed on Friday versus its open on January 2nd, do you know how far the Dow has moved in that time period? We're talking 4 months. Well, we're talking, what, 3 months and 20 days, calendar days out there, in essence. You know what the movement has been? 3 points. 3 points. We're in a market out here right now until these consolidations get broken, either side out here. We're really in a market where this is a, when you're trading the indices, It truly is a trader's paradise from an intraday standpoint. On a daily standpoint, not so much. Lots of gyrations out here. But the bottom line inside of the NASDAQ, not unless it breaks 4270 or breaks 4473, is there any other message other than we're just traveling in a consolidation pattern out here? That's what's going on inside of it. And I think it's the NQ that you'll pay a lot of attention to. Let's go take a look. Well, I'm sorry, I turned off a couple of buttons out here. Let's turn off these two now. Let's turn this one off. What else is going on? So there's this little hammer candle that formed out here from March the 26th. That level here has acted as a support level. That's the bottom. I'm showing you the top of the box. What actually took place on Friday was a test of the top of that hammer candle. 4327 is the number. So right now, all that we know is that swing point has been rejected. We'll see if it gets tested again. We know the larger pattern, which is the consolidation. We also have our wonderful TAS market profiles out here. On Friday, as the NASDAQ was pulling back, what was it doing? Pulling right back into old resistance. Old resistance thus far has become new support. Price got down to that point of control area, very close to it in the 4320 level. So this is more of a bullish setup than it is a bearish setup inside of the NASDAQ. But let's face it, what it really is, it's really just more neutral. It is nothing more than a consolidation pattern that's going on inside of it. Nothing has broken down. Nothing has broken out. If we take a look at the Dow out here, if we look at the Dow right now, what we know about the Dow, what it did on Friday, came back and tested the top of its hammer candle out here. That was on March 26th. What's the importance of the hammer candle? Well, the importance is just simply that it really tells you where the market was trying to hammer out a low. That says that low from the trading day of March 26 is very important. Now, you don't have to trade the futures out here, but if you want to know what's going on in the marketplace in between the time the market closes and now, you really do need to have access to this data, especially from a pattern standpoint, pattern recognition standpoint out here, and even from a candlestick standpoint. The Dow itself, when we go back to March 26, it did not form a hammer candle out there. So there's important pieces of information that both you and I can glean out of this. The top of the hammer candle was tested. Are we going to see the bottom? I don't know. I don't know the answer to that, nor does really anybody else out there. But again, we got the consolidation pattern inside of the NASDAQ to pay attention to, inside of the Dow. We're just going to watch that March 26th area. We'll watch it like a hawk. If we go take a look at the S&P futures out here, well, just as the NASDAQ has its consolidation pattern, so too does the S&P futures contract. Come on, work with me. There we go. I'm not talking to you, folks. I'm talking to my charts out here. Okay, there we go. Here's the consolidation pattern inside of the S&P futures. You go back to the February 10th level. You can probably take it back a couple of days. But basically, you're looking from 2034 to 2108. So what does that work out to? Let's say 2030, 70, about 75 points out here. That's the size of the consolidation. What does that say? That says, number one, if the S&P can break 2108, you can add 75 points to it. If it breaks 2033, then you can subtract 75 points out there. If we take a look at what the S&P did on its daily contract, just came back and tested old resistance of its TAS market profile. This is Steve Rhodes with TFNN. We'll be right back, folks.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures up 116. S&P is up about 10 1/4 points out here. Now, we took a look at the daily charts out here just to get a feel for what's going on. So we've got the, somewhat bigger picture out here. Of course, bigger picture, we go take a look at the monthly charts out there. Monthly charts still say the S&P 500, 2350, 2450 is its target. Russell 2000, 1350. So we know the bigger picture. Now, New York Stock Exchange, 6,000 point move to the upside over time out here. So then we know the bigger picture is right now at this stage here pointed to much higher prices over the long haul. But right now we took a look at the daily charts just to get a feel for what's going on in this juggernaut out here. Now let's go take a look at an intraday chart. Let's go look at a 30-minute chart here for the S&P futures. Question is, has price just simply, we just seen a counter trend rally from the nice move down on Friday that we saw. If you're watching us on Tiger TV, what you are seeing here is a descending price channel. What we know here is if you're bearish, what you certainly want to see is you want to see the top of this descending price channel where price has at first tagged it at about 3:30 this morning. Price moved up as Europe came online. Price moved higher here. We've seen it rejected. We've seen it tested back here at 6:30 to 7:30. We've seen it being tested here between 8:30 and 9 as we came on the air and as we are right now. If this level gets taken out, the next areas, likely areas where price would travel to Number one, you got to be careful because it's a potential change in trend if we see price break above the short-term descending price channel. Now, if this level gets broken, one area of resistance that we take a look at is our Fibonacci retracement. We can also see that from the high out here on April 16th down to the low of Friday afternoon around 2:30, 3 o'clock in the afternoon, we have seen that price has also made it back to its 0.618 retracement level. That exact price point, 2,089 and a bit of change out here. The actual high was 2,089.75 inside of the ES Mini. If price breaks through this descending price channel, expect price to then move up to the 2,096 level. But I would say it's really 2,099 and a quarter to be exact that you would be watching for to see if that area acts as resistance. If today the ES Mini closes above 2,099.25, the weather pattern, the scare of a monsoon rains or some type of tsunami, they would be overstated out here. Once price gets above that level, and then it gets what? Then it's a moonshot. Then everything, all the reaction on Friday was nothing more than an overreaction. But at this stage here, what we do know, let's go with what we do know, and that way we know what it's like. You know, it's like coaching a football team out here, right? You know, you put in your play, they put in their play, and then you've got to know what to be looking for out here so that you can be ready for the next play out here. At this stage of the game, the Bulls have gotten the price, nice counter trend rally up to the top of that descending price channel. If this thing holds, then price moves down to perhaps the bottom of the descending price channel, or at least a revisit of those lows out here from Friday. So we know what to look for. We can also, as far as taking a look at our charts out here, I can turn off, I can turn on and off anything that I want out here. Let's put our TAS market profile just simply from a 30-minute chart out here. And in doing so, let me turn off the channels, and let's turn off the Fibonacci. There we go. So now as we take a look at this is another way for us to take a look at supply and demand. What do we know at this stage here? What we know about this stage is that right now price is really trading into the support level of this little profile. And this market profile actually says that it's buyers that are in control out here. Take a look at, you can see, you know, you continue to see these higher profiles, but just simply because of where that light blue line is in comparison to the support level. It says that the top ought to at least get tested. That top, by the way, is 2088.95. So I suspect that as the market opens here in a couple minutes, we see the futures go up and at least test that level. But the question will be, will the futures be able to stay above that channel line? So we'll know within the next half an hour. Certainly we'll know within the next hour and a half. So that's what's going on from an intraday basis. And when we do, you know, I had a question on Friday with regard to full moons and new moons out here. Let me just put this chart up on my screen. My response was that when we take a look at the those two lunar cycles out here, they really don't seem to have much consistency. Now, specifically, the question was about the new moon. Those are the red lines on my chart out here. And the question was, do they tend to identify market turns of any significance for any period of time? If you just take a look at each of these red lines on my chart out here, I cannot see any rhyme or reason to any kind of pattern that helps you to identify any kind of market top or really any kind of market bottom or anything that lasts for more than just a few days out here. The green lines on here, those happen to represent days of full moons. Full moons seem to work better than new moons do, at least when we take a look at this. Is a Dow chart that you're looking at as we take a look at this. So I thought that that would be helpful to that viewer, that listener, and yourself as well. This is Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economies CD. This is a CD that could really deliver, but you have only until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside. And should they lose? No worries. There's zero downside risk here, as you'll still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 156, trading out at 17,982. S&P up 14 at 2,095. Composite up 27 points. She's traded 49.58. Russell 2000 up 6 at 12.57. DAX up 186. FTSE up 38 points. Gold back $8 right now. Silver down 26 pennies. Light sweet crude is flat out here, off 8 cents, trading at 55.66. To the upside, leading the charge dollar-wise, you've got Hasbro up. You got Hasbro and you've got Google. They're both up about $5 right now. You've got Duro Biotech up 3.66. Checkpoint Software up about $4. IBM up a couple of dollars. Costco up a couple of dollars to the downside. Faro or Faro Technologies, F-A-R-O, is a ticker symbol off 25 whopping percent this morning, down $15. Ampio Pharmaceuticals, that's down 4.60. Royal Caribbean Cruise Lines down $4.50 out there. Netflix up a couple of bucks. Caesars Entertainment down $1.28. That initial test that we were looking for inside of the ES Mini, that test of that 2089, that is taking place. That was to be expected. At this stage here, we're seeing the descending price channel fail. Now we're in a new 30-minute bar out here, but that was my expectation this morning. I went ahead and typed that in to the den, around 8 o'clock or so. That my expectation was that we would at least see the test of that 786 level, and then we'll see if that area holds. Again, it's both the combination of the 786 as well as that 2099. So we really should see the ES Mini spike up to 2096, another 5 points higher. But we'll just simply have to wait and see. Now let's go take a look at let's look at the island reversal pattern. I mentioned this on Friday during the open, during the 1 hour show. We saw the gap down inside the New York Stock Exchange, and it did create an island reversal. Looks like they're going to be saved. There's not going to be any Gilligan's Island top reversal out here. The low of the New York Stock Exchange that we're looking for, let's see if it's been hit yet, 1134.03, and we've seen a high today of 11.058. 11.058 versus a low of 11.134. So no, it hasn't hit it. Let me make sure. Yeah, 11.134 is the number. So if we get to 11, you're at 11.129 as we speak right now. There will not be any kind of island top reversal pattern that's really out here of any significance. But as long as I've got this chart up here, let me show you a couple of different things out here, just to keep a decent perspective inside the New York Stock Exchange, as long as we're here. Let's take a look at because it's in a huge uptrend out here. Let's take a look at what we know about the New York Stock Exchange. I'm going to turn a couple of patterns off so we can take a look at this stuff one at a time out here. Let me pull this back. Now, the New York Stock Exchange, my data, by the way, let's do this. Give me a moment here. Let's see, which one is that one? Okay, that's the short term. Okay, that's the intermediate. Nope, there's the intermediate term. Okay. And I'll show you a number of island tops and island bottoms out here for us to also pay attention to. But let's take a look at the New York Stock Exchange. Now, my data, New York Stock Exchange, the first stock traded back in the 1700s or so? I don't have chart data. Unfortunately, it goes back that far. My chart data out here goes back to the 1980s, 1981. But if you take a look at the bottom, where there's a chart data, these are the blue diagonal lines going across my screen. Remember, on the oops, how'd that happen? On the 30-minute chart for the ES Mini that we were looking at. We were looking at a ascending price channel. Here's a rising price channel inside of the New York Stock Exchange. Now, what's interesting here is the bottom that had formed. That's where the actual lows also stopped back in 2009. Now, the top of the channel out here, we can see that prices kind of run into some resistance out here on the top of that price channel. Price can move a bit higher, and we'll see if it can, the bottom of that channel is really cemented pretty well. The top is, okay. Now, that's what's going on a monthly chart out here. That's the long term. I'm going to pull this up. We'll make this wider here. I'm not going to turn off. Well, I can turn off the text. Let me turn off some of the text out here just so it cleans it up just a bit. I can always go add all that back in there. I should be able to. Text. Get rid of text. Text. Where else do I have text out here? There's some text. There's some text. Okay. Well, I'll leave the boxes out here. Now I'm going to put up I'm going to try to put it up. Where did I put it? Right here. Here is the intermediate term time frame, if you will. Here's the rising price channel coming off of the March 2009 level. So the blue price channel, blue diagonal lines that you see on my screen out here, those are the levels that go back to 1980. That's the rising price channel inside the New York Stock Exchange. When price came down to the bottom back in 2009, it tagged the bottom of that level. Remember, all those that channel line was evolved back in the 80s. So that acted as a level of support. Can't bust it down, you go try to bust it up. That's where price is getting to right now. The top of that channel, as I say, it's maybe it's good, maybe it's not. I'm not going to worry too much about that at the moment. But if we take a look at that nice, the New York Stock Exchange, in order to really break its trend, has to get below and close below the green line out here. It's nowhere close. I'd say we're more likely than not to see a test of the rising price channel, the one coming off of the March 09 609 level than we are to see a price move all the way back down to the bottom of that. And that's what's going on the intermediate and the short term. Now, if I switch over to a daily chart to get a feel for where those lines, maybe if they do show up, here is that here is that island top reversal that I can't tell if it's still in play. 11, it's still in play by just a few points. And so we have to respect that. But we can go back and take a look at, I won't do it during this segment here. I'll do it throughout the day, where we'll take a look at, various island bottoms and island tops. And the reason why both you and I want to respect that and pay attention to it. Likewise, so it did form. There's no question that it formed, okay? It absolutely formed. That's an island top reversal pattern. The question is, does it have follow through? Meaning, does price move to the downside? Here's the deal. When the top gets taken out, which it will, 11,203.06. There is nothing more bullish than a failed bearish pattern out there. And there is no more failed bear. There could be no more failed bearish pattern than an island reversal that just simply fails. And that's what we'll look at through the course of the day out here. If we take a look at the short-term trend line out here, channel line out here, that is the... Did I get it right? Yeah, that's the yellow line. That's the one that just really formed back here in October 2014. So we can see that there's no change in trend. There's been no there's really been no damage done in the New York Stock Exchange. And lastly, not truly lastly, but I can also put up here our primary trading range. These are our monthly numbers out here. And you can see the last time down, price held right at that monthly horizontal trading range number of the 10,652 level out here. So that midpoint, 11,453, that's where you would expect the New York Stock Exchange to trade up to, if in fact you can get above the high of Friday out there. So that's what's going on inside the broader market. Now let's go take a look at some things here that are moving and grooving inside of the market. Let's go take a look at to the upside. Let's look at Google. Let's go see what Google is doing, up about $5 as we speak right now. Google here had certainly did not form that A to B equals CD to the upside. Let's go see. It looks like more likely an A to B equals CD to the downside. Let's take a look at Google out here. Let's look at retracement levels from low to high. Now the low that we're going to use is January 12th. Whoops. January 12th, 2015. So we're going to go from that. Well, I've got to grab it, actually, and that makes it a little bit easier. That's the second time I've done that. Let's take a look at it again one more time here. There we go. From that low to this little doji style candle on March the 5th. Price came back and, boy, I did it again. Pretty much hit the 0.618 retracement level right to the spot. So you've got a Gartley buy pattern that have formed in Google on Friday. Now what it's doing, it's trying to give you that bullish reversal signal out here, which it would do if we were to close above the open of Friday. The open of Friday was 528.66. So you've got, here's your A to B equals CD. There's, the A to B equals CD pattern out here inside. Oh, come on, Stephen. Work. There we go. The A to B equals CD pattern out here inside of Google. This thing is not really working with me here. I'm gonna have to take it to the woodshed a little bit. Here's your A point out here. Come on, do it. There we go. The A point from March the 5th, your B point down here from March 13th, your C point out here on March 24th. We've seen a 1 to 1.618 A to B equals CD to the downside. You've seen a 0.618 retracement. In essence, Google may be giving you a confirming Gartley buy pattern. You see a bullish reversal signal today, some additional follow through tomorrow, and then any Gartley pattern, as you know, can turn into one of any 5 outcomes out there. And the first outcome, as we take a look at it, let's assume that it is going to be a successful Gartley buy pattern. The first pattern is a bounce up to 542.75. That would be your first outcome. Second outcome, 556.17. That's what's going on inside of Google on its daily chart out there. If we look at Hasbro, HAS is the ticker symbol. I believe they were out with numbers. Earnings per share 21 cents versus 14 cents. So nice job there. Net revenues of $713 million versus $679. Toy business is alive and well. Hasbro has just simply been knocking it out of the park. It's at a new all-time high, I believe. Let me put this on a monthly chart out here. I believe that it is. Yeah, at a new all-time high out here. So Hasbro looking very strong as it is trading at $70.58. Let's put this back on the daily time frame. Volume behind the move today so far 1.2 million shares. That is a big gap. That is a big a breakout. Good volume behind the move. Last time we saw a nice gap inside of Hasbro was up on February 9th. That had 4.9 million shares. It looks like it's going to do another 5 million share a day, maybe even more than that. HAS is the ticker symbol. Also moving here to the upside, let's take a look at Amazon. That's up $4, trading out at $3.79. A big day to the downside on Friday. Volume did accelerate a bit. 3.8 million shares. Has not broken through its support level of its most recent swing points out here back on March 26, 2.9 million shares. Friday, the volume 3.8 million shares, but Amazon's got some pretty strong support out here at this gap, which has not been tested. That's from January 30th. Let's look at some things here moving to the downside this morning. This ticker symbol FARO, Faro Technologies Inc. off $15, down 24%. Just looks like on some type of downgrade. I don't see what the story is behind it, but the story with regard to shareholders, they're saying this thing is coming all the way back to its original breakout. This thing had broken out back on October 31st, back in 2013, and that says probably we see price inside this equity maybe come back. That's the April 29, 2014 level around 46.90. What the heck am I talking about? 46.90. It's already back down. It's trading at 46.59. What's the low out here? 39.75. There we go. I think my cursor was in the wrong spot. 39.75, very likely where that will head to. Back in. Let's go take a look on the intraday time frame out here. Let's go see. That's still a nice wide-ranging bar. So, yeah, 2096 next up inside of your 2092 inside of the ES Mini on the 30-minute chart out there. Okay, back to the main game out here. Let's go see what's going on in the case of Royal Caribbean Cruise Lines out here. RCL is the ticker symbol. It's trading down to $5 out here. Were they out with numbers? Looks like they are. Net income of $45 million. Wow, how about this? Net income, $45 million versus 26. They're cut, paste, and assembled, guys. Their CPAs were on the ball there. Total revenue is only $1.8 million, lighter than last quarter. $1.8 million versus the prior quarter, prior first quarter versus 1.88. But boy, they had the cut, paste, and assemble team out in full formation out there. Let's take a look and see where this is traveling to. If we take a look at Royal Caribbean Cruise Lines out here, it is coming right back into an area where this thing had broken out. There's a little gap out here that took place. Let me get rid of the profiles just for a moment, make it a little bit easier for you to see with me. Let's get rid of that. And if we take a look at Royal Caribbean Cruise Lines, had a nice gap. There's some signs of strength out here inside of Royal Caribbean. There's this not a wide-ranging bar, but boy, big volume. No idea what took place on December 4th, other than the mere fact that there were 34 million shares at trade at hand. So 72.20-ish ought to be a level of support inside of Royal Caribbean Cruise Lines. If it breaks through that area, then there's nothing really to, what potentially the area you'd be looking at $69.87 to $72. If you break below $69.87, there's really not a whole lot to stop it until it gets all the way down to $52 or so. I'm not saying that's where it's headed to, but these are the lines of demarcation that you want to go ahead and take a look at. That is in Royal Caribbean Cruise Lines out there. You've got Bluebird Biotech. Today it's a Cardinal. It is being painted red, $5.25 to the downside out here. As we take a look at his daily chart, is there much in the way of damage? Now, talk about a wide-ranging bar and a gap up. That's what you would be doing if you were looking at the date of December the 9th out there. 8.2 million shares to the upside. That's a pretty strong level of support inside. They must have cured some disease out there. That trading session. At this stage of the game, 200,000 shares to the downside. I don't know that that's really a huge deal out here. If anything, maybe this does pull back into this trading day of March 5th out here, somewhere between 101.50 to 112.53. Right now, we've got the Dow. She's up 228, S&P up 19, composite up 41 points. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's up 220. S&P is up 19. Composite's up 39. Let's go take a look at things we should be focused on and paying attention to today. Hey, how about, I say today, but how about Friday's action here? If we take a look at that VIX index, you don't think that 50-day exponential moving average line is important or not, do you? Take a look at how price hit that level. It looks like a shooting star, smells like a shooting star, but it is not a shooting star candle out there on Friday. But what it was it was a rejection of that 50-day exponential moving average. What you and I both know is that when the VIX index gets above that, that's when you do see price erosion, price damage inside of the market as it relates to the S&P 500, and that level was rejected. The key level there to be watching today is going to be 1477. That's your 50-day exponential moving average. Friday, the price drop was enough to push all of the price oscillators down below the zero line. That's the New York Stock Exchange, the NASDAQ Composite, the Dow out here. New York Stock Exchange needed about 1,270, 1,300 net advance in issues today in order to get back above zero. And if it does close back above zero, then that more than tells you that the buyers are back in control of the market. It's an absolute failure of the bears at that stage. Right now, you got net advancing issues about 2,200 and change versus about 600 net decline issues. So about 3.5 to 1 or so. That's a nice strong market breadth. But it's all going to be about the close today. Will those price oscillators stay above the zero line? I will say the other key to be focused on and paying attention to, even though you don't trade the futures necessarily, watch that price point level of 2,099 and a quarter. If we see price close above that, the Friday's action will have been nothing more than a huge emotional blowout to the downside. You can expect the market to move higher into the May timeframe, to that May 4th timeframe or so out there. So that's what's going on in today's markets. If you're off to start your Monday, have a great day. Thanks so much for joining us here at TFNN. Stay tuned, though. Hour 2 of the Trader's Edge will be up in about 12 minutes or so. Take care, folks.